Okay, so last time we talked about investing in a broader, more universal scale. Now we're going to dive a little bit deeper into it with the specifics of investing. So let's get right into it. Okay, what do we specifically look for when buying? I'll hide this for a second. Okay, so what do we look for when we are buying shares? Here are some things we should look into specifically. Uh, PE ratio. This is the price to earnings ratio, also known as the PE or PER. It is the ratio of a company's share price to the company's earnings per share. The ratio is used for valuing companies and to find out whether they are overvalued or undervalued. This is super important to take into account while looking at a company, how long they've been around, if they're safe, or if it's kind of all over the place. You need some good markers to indicate whether or not it's a good time to get in or not, and it's super helpful. It's a super helpful thing they give to you. Most websites like Robinhood and Fidelity both provide that to you, and it's also something you can just search up. Next up, the company's market sector. This is something that you should mostly look at. It doesn't really affect the stock itself, or maybe it will actually. I take that back. It's more something you should familiarize yourself with, as the market sector is something you should be able to understand and maybe even maybe put yourself in the shoes of a customer in this market sector, whether it's AI or defense contracting. There's so many different ways you could go about it. Even the entertainment business like Disney, Hulu, all of those deals, you should know. Yeah, like what are they selling? Who are they selling to? Does this market have longevity? AI is super. It's gonna have a lot of longevity, so a lot of people buy into it. So as like Nvidia, the tech companies, um, Amazon, Tesla, these are all companies that are going to be around for a while, hence the share price being higher, and also more people are going to want to buy into it. Definitely something to take into account. How long has the company been in business? Or a better way of saying that is, how long have they been turning a profit? You don't want to buy into a company, and most of the time you never will. Most of the time the companies you should buy into are pretty well known, unless you're an angel investor. Maybe you're dropping some capital into a line of business that's just opening up, which is something you could definitely do. But um, as far as Fidelity goes on the public market, most companies should have a pretty good history, and they should be able to cement themselves pretty fast. So you should take that into account. What are their quarterly sales? You should try and find out a way if you can access, or you can just look at the chart that they have up on. If you search up on Google, whatever stock it is, or whatever company is, you can search up that company followed up with stock, and they will like give you the chart. So you should look at that and probably look at it from a month long perspective to see how they've been doing, especially throughout the month of April 2025. That would be something to look into. Who owns the company? Look into the background of the owners of the company before pulling any triggers. Whether it's a private equity firm like BlackRock, or maybe the owner, specifically the owner, is a good, reputable person. Say it might be a little bit safer to buy into, as to where other people maybe might not like it. It comes down to personal interest as well whenever you're taking that into account. Look at the charts. Every stock that you have the ability to buy into will have a graph. This graph shows you uh, how it's gone throughout the day, especially on the daily scale. You can see as it opens up, where does it go, up, down, and then whenever the market closes at 3, you'll get a full perspective of how it trended that day, and you can kind of make a decision. I wouldn't make a decision based off the one day. You should really look at it from the past 6 months, or maybe a year's too broad. 6 months to 1 month is definitely something you should look at when maybe considering buying a few shares of a stock. Buy low and looking at the stocks. When a stock is reaching and climbing, it may not be the best time to get into that company, but if it shows signs of sustained growth, and buying in whenever its peak fizzles out may not be a bad idea. It's pretty self-explanatory, you know. Buy low, sell high. And then we already went over P to E ratio. Yeah, super relevant number. And if you don't know what the P to E ratio is when buying into a company, you should definitely find out what it is. Alright, that's it.